Welcome to this short executive knowledge lecture on Topic 2, Paper 7 of the SFC licensing exams. This topic covers the financial system in Hong Kong, and we'll be looking at the roles of the government and regulators, participants in the Hong Kong financial system, and factors affecting the Hong Kong market. So it's very Hong Kong specific. I will emphasize the important points to help you understand the core material you need to know to sit the exam. A copy of the study notes you see on the screen can be downloaded from the Executive Knowledge website under Paper 7 Resources. Now, as ever, I strongly recommend that you supplement this learning with question practice. And we have over 300 questions on the Examinator.online platform. Okay, let's start by looking at roles of government and regulators. And the first regulator we come to, the Hong Kong Monetary Authority, the HKMA, which is Hong Kong's quasi-central bank. And as we list there, HKMA is required to maintain currency stability, ensure safety and stability of the banking system. So the focus is on the banking system. Promote efficiency, integrity, development of that system. Manage the exchange fund. Now, the exchange fund holds all the US dollars that back the Hong Kong dollar. Hong Kong, as we're going to look at further in a moment, runs a currency board system. We loosely refer to it as a peg, where for every 7.8 Hong Kong dollars, 1 US dollar is held in the exchange fund. And the HKMA manages the exchange fund. It manages Hong Kong's monetary policy up to a point, in that because of the US dollar peg, Hong Kong's interest rate really has to mirror the US interest rates. If US interest rates go up, Hong Kong interest rates have to go up. And also the HKMA supervises the banking system. Now, what about supervision of intermediaries with regard to the regulated activities in Hong Kong? Is it the HKMA or is it the SFC? Well, as you will see there, the HKMA directly supervises authorized financial institutions. Now, AFIs, authorized financial institutions, is the terminology in the Securities and Futures Ordinance. The terminology in the Banking Ordinance is authorized institutions. And you can see both referred to in the exam. Now, if an AFI, if a bank performs an SFC regulated activity, it must register with the SFC and it will be known as a registered institution. Now, these are principally the banks. It has to be said that all banks are AFIs, but not all AFIs are banks. You can have money changers, for example, that are technically AFIs but are not banks. The SFC supervises all other firms that are performing SFC regulated activities that are not AFIs. They must be licensed by the SFC and they're known as licensed corporations. Registered institutions and licensed corporations combined collectively are known as intermediaries in the legislation. So Hong Kong Monetary Authority supervises the banking system, but it also looks over registered institutions, those institutions that carry out SFC regulated activities. Now, further details of HKMA's activities, and these can be examined. Now, the currency board system and the exchange fund, that is what I just described. Third bullet point there, exchange rate stability maintained via market-induced interest rate adjustment mechanism, and the linked exchange rate means the Hong Kong interest rates need to follow in US interest rates, and that is just what I said. Now, central bank and liquidity management, this is the short-term liquidity in the Hong Kong markets. And this is done through the discount window that the HKM operates. And we'll come to that in a moment. But before we get there, we're told there are 3 tiers of AIs, authorized institutions, that's the banking ordinance terminology. We have licensed banks, minimum paid up capital of 300 million, can take all types of deposits without any restriction. Those are your commercial banks. Restricted license banks, they have a minimum paid up capital of 100 million Hong Kong, can only take time deposits of 500,000 Hong Kong dollars or more. These tend to be the investment banks. And deposit taking companies, they have a minimum paid up capital of 25 million Hong Kong dollars and can only take time deposits of 100,000 Hong Kong dollars or more. Now, as I said, to enhance the Hong Kong market's liquidity, the Hong Kong Monetary Authority operates this discount window whereby fully licensed banks and restricted licensed banks, so those are the two categories of banks that are able to obtain overnight liquidity to cover shortfalls. And they do this by entering into repurchase agreements, which are referred to as repos. Now, under a repo arrangement, banks can sell high quality assets such as exchange fund notes, but also exchange fund bills. They sell them to the Hong Kong Monetary Authority, promising to buy them back at an agreed price at a future date. It's usually overnight. So they will sell them at night and then in the morning buy them back at a higher price, and that higher price covers the interest element of the transaction. Now, the Hong Kong Monetary Authority's provision of short-term liquidity vital to stability, credibility of the financial system, and you can get a question on that, so please be aware of that mechanism. Now, the payment systems operated by the Hong Kong Monetary Authority, we have two. The real-time gross settlement system, RTGS. Now that settles all gross positions of banks in the financial system. This is the type of material that pops up in questions. Now, both licensed and restricted licensed banks are included in this payment system, this settlement system. The authorized institution maintains settlement accounts with the HKMA, and payment obligations are cleared on a continuous deal-by-deal basis, not at the end of the day, for example, no, on a continuous basis. Now, the Hong Kong Monetary Authority also operates the Central Money Markets Unit, the CMU, which is the electronic clearing and settlement system for exchange fund bills and notes and other debt securities. And we're told there is an interface between the RTGS and the CMU, allowing repurchase agreements to be electronically transacted. And we talked about the repo transactions in the previous section. Be aware of those payment systems. You don't get examined on these in any of the papers except paper 7. So paper 7 is where you could get a question on RTGS or CMU. We move on, operated by the HKMA, the exchange fund. Now, I've already talked about this with regard to holding the US dollars that back the Hong Kong dollars in circulation. First point there, established by the Currency Ordinance of 1935 to hold assets backing the note issue in Hong Kong. Moving down to the fourth bullet point, the government's fiscal reserves are also included in the exchange fund. And the fiscal reserves, that's budget surpluses maintained to cover seasonal and cyclical deficits. And then a short bit on banking supervision. HKMA has implemented risk-based supervisory approach under the Banking Ordinance, and the banking supervisory standards put forward by the Basel Committee on Banking Supervision are followed by the HKMA to ensure that Hong Kong maintains its position as a world-class financial centre. Now we move on to the second regulatory body, the Securities and Futures Commission. Now, I touched on that with regard to supervising licensed corporations. And the SFC was established in 1989 after the problems of 1987, Black Monday. And its role is to administer the laws governing securities and futures markets in Hong Kong and to encourage development of these markets. Now, what can be examined is the SFC's objectives. And we just have to, I wouldn't necessarily memorize them, but I would be aware of these objectives as a backdrop to what we're studying. The SFC should maintain and promote fairness, efficiency, competitiveness, transparency, and orderliness of the industry, promote understanding by the public of financial services, including operation and functioning of the industry, provide protection to the investing public. That's considered extremely important. Minimize crime and misconduct in the industry, reduce systemic risks in the industry. In 1987, the Hong Kong markets closed for 3 days after Black Monday. That was severe systemic risk. So now the ASFC is tasked with reducing that systemic risk. Assist the Financial Secretary in maintaining financial stability of Hong Kong by taking appropriate steps in relation to the industry. Now, the SFC, to achieve the objectives, operates through a number of functional units. There they are. Corporate finance, it's a division, investment products, enforcement, supervision of markets, legal services intermediaries, and corporate affairs. Okay, Mandatory Provident Fund Schemes Authority. This came in with the introduction of mandatory provident fund schemes in Hong Kong in December 2000, a statutory retirement fund that we all have to contribute to. Main function of the authority is to register the MPF schemes and approve the trustees, regulate activities of approved trustees to ensure prudent fund administration. It makes rules, guidelines for mandatory contributions and the administration of them, and it proposes relevant law reforms. The Hong Kong Mortgage Corporation, that was established to encourage development of secondary mortgage market. It's akin to Fannie Mae and Freddie Mac in the US, where individual mortgages, which are in themselves illiquid, are combined to create more liquid securities, and the securities are then issued and known as mortgage-backed securities. Insurance Authority regulates and supervises the insurance industry, ensures that all insurance policy holders in Hong Kong are protected, and promotes general stability of the industry in Hong Kong. Now, Section 1.6 looks at the exchanges, stock exchange, futures exchange, and self-regulatory bodies. Well, the stock exchange, futures exchange are self-regulatory bodies, and they're 100% owned by the Hong Kong Exchange and Clearing Limited. That is a listed company in Hong Kong. And further down, we see within this exchange group, we've got 3 clearing houses: the Securities Clearing House, the Options Clearing House, and the Futures Clearing Corporation. We will look into these in a lot more depth in Section 5. The SFC supervises and monitors the activities of these companies. It's very important to appreciate that the SFC does not administer the exchanges. It supervises the exchanges. We have the Chinese Gold and Silver Exchange Society, and that society promotes paper gold schemes, and those are classified as collective investment schemes, which are regulated by the SFC. And then finally, we have a number of industry associations and professional bodies that encourage members to maintain professional standards of conduct, and we've listed them. Hong Kong Securities Investment Institute, HKSI, which administers the exams that you're sitting. Hong Kong Investment Funds Association, Hong Kong Association of Banks, the Alternative Investment Management Association, Institute of Financial Planners of Hong Kong, Hong Kong Society of Financial Analysts, that's the world of CFA, and the Hong Kong Capital Markets Association.